So Amazon just reported their own quarterly results, and just like with Meta, which we've covered recently, that video will be in top right corner, just like with Meta, the stock is up after hours. The market is pretty happy because again, it beat all expectations across the board. The business is doing quite well, especially from a profitability standpoint. Remember, Amazon back in 2022, even beginning of 2023, when it comes to free cash flow, it was still negative. And so as they are increasing free cash flow each and every quarter, I think in the next 12 months, we might be seeing an announcement of a share buyback. Because currently, Amazon has been diluting shareholders for quite a while. Since free cash flow was negative, they were not able to buy back their own shares. They rather invest in their business, grow their business globally, which I'm fine with it. But I do think that in the next 12 months, we're going to see a share buyback. I don't think it's going to be as big as Meta. Meta just increased its own by $50 billion. And by the way, if you don't know, they also declared for the first time a dividend payout. I don't think Amazon is anywhere near declaring a dividend, but I do think they're getting closer to announce a share buyback program. Now, overall, yes, shares have gone up quite a lot since the lows back in 2022. Shares are up over 90% now with the after hours action. So you might say maybe it's a bit more expensive right now. Maybe it's a bit better to keep the cash and earn more on that right now with interest rates being still so high. Okay, I could understand that, and that's why my time frame for a share buyback sits at the next 12 months. We're going to get announcements. That's just my opinion. Now, before we jump into the earnings report, Amazon announced this today, by the way. Amazon announces Rufus, a new generative AI-powered conversational shopping experience. This, of course, shouldn't surprise you. I think most of the online shops and stores and even social media channels will have a co-pilot, will have an AI assistant. Shopify already announced one. It was only a matter of time until Amazon announced their own. So Rufus is an expert shopping assistant trained on Amazon's product catalog and information from across the web to answer customers' questions on shopping needs, products, and comparisons, make recommendations based on this context, and facilitate product discovery in the same Amazon shopping experience customers use regularly. So with Rufus, customers can learn what to look for while shopping products categories, shop by occasion and purpose, get help comparing product categories, find the best recommendations, ask questions about a specific product while on a product detail page. I think this is all about making the shopping experience a bit more personal, maybe driving even more sales as well in an effective way, in a profitable way. I think this is a no-brainer and an added value to whatever Amazon is already offering today. Now, before looking at the main numbers, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. So net sales increased 14% to $170 billion in Q4, with operating income increasing to $13.2 billion compared to just $2.7 billion same quarter in 2022. Net income increased to $10.6 billion in the fourth quarter, or $1 per diluted share, compared to $300 million or just 3 cents per diluted share in the fourth quarter of 2022. Then with regards to full year 2023, net sales overall increased to $574.8 billion. That's over $500 billion. With operating income increasing to $36.9 billion and net income reaching $30.4 billion or $2.9 per diluted share. Now, this is the interesting part. Operating cash flow increased 82% to $84.9 billion, always giving us the trailing 12 months. And free cash flow improved to an inflow of $36.8 billion. And I mean, if you look at this slide right here, this is truly beautiful. And of course, as I've been saying for, I think, the last 2 years or so, this was bound to happen, right? If you looked at operating cash flow, this was already increasing quite a lot by the end of 2022. And so it was only a matter of time until free cash flow followed suit, because I mean, from Q4 2022 to Q2 2023, they increased operating cash flow by around $15 billion. And so free cash flow went from a loss, an outflow of $11.56 billion to an inflow of $7.87 billion. Of course, this is again trailing 12 months. But since Q2 2023, we went from $7.8 billion free cash flow to $36.81 billion. Truly remarkable. I expect this trend to continue on the way up and to the right. And so going over a couple of comments here by Andy Jassy, the CEO of Amazon. This Q4 was a record-breaking holiday shopping season and closed out a robust 2023 for Amazon. While we made meaningful revenue, operating income, and free cash flow progress, what we're most pleased with is the continued invention and customer experience improvements across our businesses. AWS continued long-term focus on customers and feature delivery, coupled with new generative AI capabilities like Bedrock, Q, and Trainium has resonated with customers and are starting to be reflected in our overall results. Our advertising services continue to improve and drive positive results. Speaking of AI, chips, etc., I think NVIDIA investors would be quite excited to hear about this. AWS will be the first cloud provider to bring NVIDIA GH200 Grace Hopper superchips with multi-node NVLink technology to the cloud. NVIDIA and AWS are also collaborating on Project Seba to design the world's fastest GPU-powered AI supercomputer, hosted by AWS for NVIDIA's own research and development team. And with regards to AWS specifically, during the call, the CFO said that they expect accelerating cloud revenue trends to continue into 2024. Andy Jassy said that cloud optimization trends continued to attenuate and larger new deals accelerated. Existing clients are renewing at larger deal sizes and cloud migrations are accelerating. Exactly what we were all waiting to hear. If we look at net sales for AWS, that increased 13% year over year, finally up from what we got before, 12% year over year, with operating income reaccelerating here, up 38% year over year. Now looking at Q1 guidance here, net sales are expected to be between $138 and $143.5 billion, or to grow between 8 to 13% compared to the first quarter of 2023. Operating income is expected to be between $8 to $12 billion. And so if we scroll all the way back down, we can look at the different segments. I don't know why the structure of this page is so bad. I would love if I can push this a bit more to the left, but okay. When you look at this, yes, it's very nice to see online stores being at $70.54 billion. That's up 9%. That's fine. But this is not where the company has high margins. You have to look at what we've been discussing for the last 2-3 years or so when talking about Amazon: third-party seller services, advertising services, subscription services, and AWS. Fast-growing segments of the business with higher margins. So, third-party seller services up 20% year over year. Advertising services up 27% year over year. It's now at $14.65 billion. Subscription services up 14% year over year to $10.48 billion. And then as we've seen, AWS up 13% year over year at $24.20 billion. I think a pigeon just hit my window. I'm sorry, but that means the windows are clean. Last thing here with regards to net sale, 62% of sales comes from North America, 24% international, and 14% comes from AWS. Now, with regards to the profitability of those sales, we can actually scroll and see that North America, the operating income there continues to go up. Profitability continues to increase. When we look at international, unfortunately, here we were on track to become break-even last quarter, pretty close, but still a major improvement year over year. Operating loss down 81% year over year, with net sales up 17%. I believe it's because Q4 usually holiday season, so they prefer to take the hit themselves. But this segment is bound to become also more and more profitable over time. So to conclude, my number 2 position has delivered yet again. The stock is now up 7.86% after hours. But truly quite a remarkable day for my portfolio. Meta and Amazon really knocking it out of the park. Pretty happy with how this earnings season has begun, despite the little kick I got from Tesla, but hey, you can't win them all. Overall, I'm very happy. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.